So imagine waking up tomorrow morning, right? You grab your coffee, log into your trading account.
Okay, setting the scene. I like it.
Yeah, and you see this just incredible setup on Bitcoin. The chart looks absolutely perfect.
The dream scenario.
Exactly. So you move your mouse to execute the trade, but before you can even click, the software just stops you.
Oh, wow.
Yeah, the screen flashes this warning, basically saying, we've analyzed your last 6 months of trading, and you are statistically terrible at trading crypto on Tuesday mornings when volatility is this low.
That is,
So we're hiding this setup from you.
man, it is just such a completely jarring concept. I mean, we are so used to analytical software being this passive window.
Yeah, it just sits there.
Exactly. You boot it up, you look at the data, and it basically lets you do whatever you want,
Hmm.
even if what you want to do is, like, incredibly self-destructive.
And that is exactly why we're pulling this apart today. Welcome to the deep dive. We've got a really fascinating stack of sources on the table for you today.
Yeah, some really dense stuff in here.
Oh, for sure. We have website copy, technical roadmaps, and this highly detailed screenshot of a user interface from a software company based in Portugal called Veldora.
Veldora AI.
Right. And our mission today is to explore how artificial intelligence is attempting to, democratize what they call institutional grade trading intelligence for the everyday retail trader.
Which honestly requires addressing a massive historical imbalance.
So massive.
Because for decades, the trading tools market has been just brutally split.
Mm.
On one side, you have Wall Street institutions with access to incredibly complex algorithmic platform.
Direct data feeds, too.
Yeah, direct feeds and literally rooms full of quantitative analysts building these proprietary risk models.
And then you look at the other side, right? You regular retail traders sitting at home with a laptop, relying on like free delayed tools,
Yeah,
trying to compete in the exact same arena. I mean, it's basically bringing a plastic spoon to a gunfight.
it really is.
Yeah.
But what Voldora is attempting to build here isn't just a sharper spoon.
Right.
They aren't just making another fancy charting tool. They are building what they call a learning engine.
A learning engine. Okay.
Yeah. And as we go through these sources, I really want you to keep an open mind about this shift. We're moving away from technology that simply gives us a fire hose of raw data toward tech that actively filters reality based on our own personal psychological flaws and strengths.
Okay, let's unpack this. Because before we can even begin to understand how an AI learns about your specific brain, we really need to understand the sheer, terrifying scale of the data it's digesting every single second.
It is a lot of data.
It's insane. According to the documents, Veldora operates a 95-instrument universe.
Yeah.
So how much data are we actually talking about here?
Well, it covers almost every major corner of the global financial market. So they are tracking 41 different Forex pairs.
Wow, okay.
They're watching commodities like gold, silver, oil, natural gas. They monitor the major indices like the S&P 500, the NASDAQ,
Crypto too, obviously.
right? Tracking cryptocurrencies, Bitcoin, Ethereum, a whole slew of altcoins. And then you add to that 20 major U.S. stocks.
Like the big movers.
Exactly. Massive market movers. NVIDIA, Apple, Tesla, Goldman Sachs. The system watches all 95 of these simultaneously, and it refreshes the data every 15 to 30 seconds.
I'm just trying to visualize that. It's like a card counter walking into a casino, sitting down at a table, and trying to memorize the decks of 95 different blackjack games happening at the exact same time.
Yeah, while placing bets on all of them every 15 seconds.
A human brain would just melt. It's impossible.
Oh, completely. But what's really fascinating here is how they achieve that ingestion without passing thousands of dollars in data fees onto the retail user.
Right, because data is expensive.
Normally, yes. But they pull live price feeds from diverse, really reliable sources, like Binance for the crypto markets, Yahoo Finance for the equities and commodities,
Okay.
and Exchanger API for the foreign exchange markets.
And the sources specifically highlight that this data is pulled at zero cost, hitting no API limits.
Yeah, which keeps the platform accessible.
Yeah.
But, raw price data is really just the foundation.
Sure.
Once the AI has those numbers, it applies technical analysis.
Yeah.
The system is calculating the relative strength index, the Mackey-D, Bollinger Bands, and average true range across 90 days of historical data for every single instrument.
Okay, hold on. I need to stop you there because we are definitely wandering into heavy financial jargon right now.
Fair enough.
Yeah, for anyone listening who doesn't spend their weekends analyzing stock charts, explain those terms to me like I'm 5. Like, what is a Bollinger Band? What is the Mackey-D? How does this actually work under the hood?
Okay, let's strip away all the math and just look at the logic. Technical indicators are really just mathematical ways of measuring human emotion in the market.
Like fear and greed.
Exactly. Fear and greed. Take the Relative Strength Index, or RSI. It's basically a thermometer that goes from 0 to 100.
Okay, a thermometer.
Yeah, so if an asset's RSI is pushing up near 80 or 90, the AI knows the market is overbought. Too many people have bought in too quickly out of greed, and a pullback is probably likely.
Got it. And the MACD.
So MACD stands for Moving Average Convergence Divergence. But just think of it as a momentum radar.
A radar, okay.
It takes the short-term average price of an asset and compares it to the long-term average. When the short-term price suddenly accelerates way faster than the long-term trend, the MACD flashes a signal that momentum is building.
Ah, I see.
And Bollinger Bands are essentially rubber bands wrapped around the price of an asset. When the price moves wildly, the rubber band stretches, showing high volatility. When the market goes quiet, the rubber band snaps tight.
So the AI is constantly checking these thermometers, the momentum radars, and the rubber bands for 95 different assets every 15 seconds.
Exactly.
That is just an incredible amount of invisible math happening in the background. But let's bring this to the surface because we actually have a screenshot of the Veldora AI version 4.2 interface to look at here.
Yeah, and it really paints a clear picture.
It does. It shows how they translate all that heavy math into something a human can actually read.
It basically serves as the user's map to this giant ocean of data.
Yeah, and visually, it's a very sleek, dark mode dashboard. It feels incredibly professional, very clean.
Very modern.
Right up top, there's a favorites list pinned to the screen. It shows Bitcoin carrying a short direction with a conviction score of 76 out of 100.
Interesting.
And right below it, gold is also signaling short with a score of 75.
See, so the software is doing all the heavy lifting there. It takes the RSI, the MACD, the Bollinger Bands, and all that historical data, and it just compresses it into a single digestible conviction score.
Right. But it doesn't just isolate the technical numbers either. On the right side of the UI, there is this panel called Market Intelligence.
Ah, yeah, the newsfeed.
Yeah, it's scrolling through 25 live global news stories. Now, I want to read a few of these headlines straight from the interface, just to show the sheer breadth of what the platform is pulling in.
Go for it.
So we have economic headlines like Fed to still cut rates, even as high oil prices spark an uptick in inflation.
Standard macro stuff.
Right. But then we have sports and labor news. WNBA and Players Union reach verbal agreement on landmark new CBA deal.
Okay.
And we also have major geopolitical alerts regarding Iran, Saudi Arabia, and Sweden.
And we should probably explicitly remind you, the listener, right now we are not taking any political stance on these real-world events.
No, not at all.
Veldora is not taking a stance either. We are simply illustrating the raw, completely unfiltered global data that the platform aggregates and feeds directly to the trader's dashboard.
Exactly. The software is entirely agnostic. It just sweeps the globe for high-impact events and puts them right next to your trading charts. But why does the AI care about a WNBA union agreement or Middle Eastern geopolitics when it's just trying to calculate the price of gold?
Well, if we connect this to the bigger picture, the AI understands that lines on a chart do not exist in a vacuum. Technical indicators are great, but they can be instantly invalidated by reality. A technical signal telling you to buy gold might look mathematically perfect. But if a major geopolitical conflict just hit the newswire, the context of that trade completely changes.
The math gets thrown out the window.
Exactly. The AI is attempting to place pure mathematical probability against a backdrop of messy, unpredictable human events.
Which actually brings up a massive point of friction for me.
Oh, yeah.
Yeah, like if I am a regular retail trader and you suddenly dump live data for 95 instruments on my screen, plus 25 scrolling global news headlines, plus technical conviction scores.
And you're going to drown.
I'm going to drown.
Yeah.
Doesn't giving a retail trader more data just lead to, like, severe decision fatigue? Won't I just overtrade, panic, and lose my shirt?
Honestly, historically,
Yeah.
yes, giving retail traders more leverage and faster data usually just helps them blow up their accounts way faster.
Right, they just get overwhelmed.
They see the numbers moving, they feel the adrenaline, and they just start clicking buttons. But this is exactly where Veldora introduces a mechanism they call the regime protection system.
Okay, here's where it gets really interesting.
Yeah. The platform doesn't just calculate scores for individual assets. It detects the overarching mood of the entire global market, which quants call the regime.
How does an AI calculate a mood, though?
By looking at the flow of money globally. If money is pouring out of safe government bonds and into risky tech stocks and cryptocurrencies, the AI detects a risk-on regime.
Meaning investors are feeling brave.
Exactly. But if money is fleeing stocks and pouring into gold and the US dollar, the AI declares a safe haven flow or risk-off regime. Investors are scared.
Makes sense.
It also measures overall volatility to see if the market is behaving rationally or just swinging wildly.
And we can actually see this mechanism explicitly working in the screenshot. We mentioned earlier that Bitcoin had a high conviction score of 76. But if you look down the list at the Euro-USD Forex pair, it's sitting at a score of exactly 49. And the AI summary at the absolute bottom of the screen literally spells it out for the user.
What does it say?
It says, neutral bias, high H regime regime, low W score, wait for clearer signal.
See, I cannot overstate how rare that is in the financial software industry.
Really?
Oh, absolutely. You have to consider the incentive structure of most trading platforms and brokerages. They desperately want you to trade.
Because they make money on the fees.
Exactly. They make their money on the spread, the commissions, or just the sheer volume of your transactions.
Yeah.
So for a trading tool to explicitly flash a warning light and tell a user, wait.
To literally advise them against pushing the button.
Right. It's a massive paradigm shift.
Yeah.
It actively protects the user from dangerous, choppy market regimes that typically just chew up retail accounts.
It's like having a seasoned Wall Street veteran standing right behind your desk, slapping your hand away from the keyboard when the market is acting irrational.
Yeah, and that brings us to the core of what makes this a true learning engine. Everything we've discussed so far is just how the AI reads the market.
The external stuff.
Right. The truly revolutionary and maybe slightly intimidating part is how the AI begins to read you.
The personal psychology aspect.
Yes.
So according to the documents, the system tracks every single trade you take inside a fully automated performance journal.
Everything is logged.
Yeah, it logs where you entered, where you put your stop loss, the market regime you traded in, the strategy you used. Then it automatically calculates these complex performance metrics, your win rate, your profit factor, and your Sharpe ratio.
We should definitely unpack that last one because it's vital. The Sharpe ratio is a metric used by hedge funds to measure risk-adjusted return.
Okay, explain that for the non-hedge fund managers listening.
Sure. Imagine two traders who both make $10,000 in a single month.
Okay.
Trader A made that money by carefully taking high-probability setups with strict stop losses. Right. Trader B made that money by emptying their bank account, taking out a loan, and betting everything on a single wildly volatile cryptocurrency spin.
Oh, man.
They both made the exact same amount of money, but Trader B took on an insane, catastrophic level of risk to get there. The Sharpe ratio calculates that difference. It tells the AI if your profits are the result of genuine skill or if you were just getting lucky while gambling.
Wow. And here is the kicker. As it builds this deep mathematical profile of your habits, the AI starts suppressing signals from setups that you historically lose on, and it boosts the ones you win on.
It adapts to you.
It is exactly like a music streaming algorithm. You know how Spotify learns what you listen to, analyzes the tempo and genre, and then curates a custom playlist so you never have to skip a song?
Yeah, the daily mix.
Imagine that, but instead of learning that you love 80s Smith pop, the Veldora AI learns that you are historically terrible at trading crypto on Tuesday mornings when volatility is low.
So just
It simply stops showing you crypto setups on Tuesday mornings. It structurally hides your bad habits from you.
the psychological protection there is brilliant because retail trading is an intensely emotional endeavor. We're just terrible at policing our own behavior.
We really are.
And another feature that ties directly into this psychological scaffolding is their signal expiry system.
Ah, the time stamping feature.
Yeah, the sources outline that every single signal generated by the AI is strictly time-stamped. After a configurable period, usually like 10 to 20 minutes, depending on how fast that specific asset moves, the signal is visually marked as stale on your dashboard.
Just in bright letters. Why does a stale tag matter so much, though?
Because it targets a very specific human flaw, the fear of missing out, or FOMO.
Oh, FOMO is dangerous.
It is. One of the most common ways a day trader loses money is acting on old information. You step away from your desk to make a cup of coffee, you come back, you see a signal that looks amazing, and your brain just panics. You think, I have to get in now before I miss the move.
Right, but you're already late.
Exactly. The momentum is already gone. The market has moved on. By explicitly branding that signal as stale in bright letters, the AI basically throws a bucket of cold water on that emotional panic. It breaks the FOMO loop.
I have to push back on this whole concept a little bit, though.
Okay, let's do it.
If the AI is acting as my personal chaperone, right?
Yeah.
If it's hiding the setups I'm bad at, breaking my FOMO loops, calculating my Sharpe ratio, and telling me when to wait, aren't I just trading inside a padded room?
I see where you're going.
Like, if Spotify only ever plays me songs I already like, I never discover new music. If Veldora hides my weaknesses from me, how do I ever learn to actually conquer them? Doesn't this just create a permanent crutch?
That is a really valid point, and it raises an important question about the role of automation in learning. But if you read deeply into Veldora's philosophy, they actually address this.
They do.
Yeah, their goal is not to trade for you, and it's not to keep you in a bubble forever. It's about triage.
Triage.
When a new trader enters the market, they are bleeding capital because they lack discipline. By restricting their view to only what they are good at, the AI stabilizes them. It builds a foundation of discipline first.
Stop the bleeding fur.
Exactly. Once you stop losing money out of sheer panic, you can consciously choose to expand your strategies. The AI provides the guardrails, but the human still has to push the pedal.
Which explains why they target very specific human personas in their marketing. The documentation mentions tailored features for the intraday trader, the swing trader, the crypto trader, and importantly, the serious beginner.
Yeah, they aren't selling a set-it-and-forget-it bot.
Not at all. They even offer educational courses and personal guidance. The whole philosophy, which is summarized in their tagline, Trade Smart, Live Well, is focused on upgrading the human being, not replacing them.
Because the human element remains the final arbiter. The tool can calculate a mathematically perfect entry point. It can warn you about volatility, but it cannot force your hand to execute the trade, nor can it manage your adrenaline once real money is on the line.
And Veldora's future roadmap shows they're planning to take this synergy even further. They have some really fascinating objectives lined up.
Very ambitious stuff.
Yeah, they are planning to ingest 2 full years of backdated historical data to replay and pressure test every scoring decision the AI has ever made.
That's massive.
And they're introducing 15-minute momentum candles. Give us the ELI-5 on what a momentum candle is.
Sure. A standard price chart just shows you where the price opened and where it closed over a certain time frame. A momentum candle visually strips out all that noise and color codes the chart based purely on who is aggressively in control of the market, buyers or sellers.
So it's much clearer.
Right. And adding a 15-minute time frame for this means the AI will be able to detect micro shifts in institutional momentum almost instantly, allowing intraday traders to pivot way faster.
They are also transitioning to true machine learning scoring. Instead of a score of 75 just meaning this technical setup looks strong, they are training a model so the score translates into a literal, personalized probability.
Yes.
The AI will eventually be able to look at your specific trading history and say, based on how you manage risk, 71% of setups exactly like this one hit your first profit target.
It's an incredibly ambitious roadmap. But this is probably the exact moment we need to inject a very sobering reality check into the conversation.
Yeah, let's hear the fine print.
If we examine the risk disclaimer in the source material, the legal language is explicit and absolute. Veldora AI is an educational and analytical tool. It does not provide financial advice.
Right.
It is not regulated by the FCA in the UK, nor is it regulated by the SEC in the US.
Which means it is entirely use at your own risk. If the AI glitches or if it gives you a signal that ends up tanking, there is no safety net here.
None. The disclaimer clearly states that past performance of any signal, strategy, or AI model does not guarantee future results. You can still lose some or all of your invested capital.
Because the market is the market.
Exactly. The financial markets are chaotic, emotionally driven ecosystems. Veldora is an incredibly sophisticated radar system for navigating that chaos, but it is not a magic money printer. No algorithm can completely eliminate the inherent risk of the market.
So what does this all actually mean for you? We started out by looking at this massive gap in the market between Wall Street institutions and the everyday retail trader.
Yeah.
But what this deep dive really reveals is a fundamental evolution in how we interact with software. AI is moving away from just being a generic librarian that hands you a stack of raw data.
Right.
It is evolving into a highly personalized discipline builder. Whether you have any interest in trading foreign currencies or not, the architecture of what Veldora is building is a clear glimpse into the future of human-computer interaction.
It is a profound shift in utility, and I'll actually leave you with this final thought to mull over. Veldora is using machine learning to meticulously track historical human failures, map our individual psychological weaknesses, and literally hide future temptations from our screens to protect us from our own worst impulses. If technology can successfully do that in the high-stakes, hyper-emotional world of finance, what other areas of our daily lives could soon be governed by a personalized discipline engine?
Oh, wow. Think about applying that logic to the rest of your phone.
Exactly. Imagine an AI that tracks your historical failures with dieting, monitors your stress levels, and automatically hides junk food advertisements, or disables your food delivery apps when it knows you are statistically most vulnerable to a binge.
Like it just locks Uber Eats at 11 p.m.
Yes. Or imagine an AI that learns your social media doom-scrolling habits, recognizes when you are falling into an anxiety loop, and structurally alters your phone's interface to break your FOMO, literally locking away certain apps during the hours you historically waste the most time.
It all comes back to that mirror we talked about at the very beginning. The tools we use are no longer just windows to look out at the world.
No, they're not.
They are looking right back at us, studying our flaws, and actively trying to construct a more disciplined version of ourselves.
It's a brave new world of self-awareness through silicon.
It really is. Well, thank you for joining us on this deep dive. Keep questioning the tools you use, keep a close eye on the information landscape around you, and we'll catch you next time.